Chinese tech stocks are roaring back this year, but they're still just a fraction of their multi-trillion-dollar rivals when it comes to company size. Today, we're going to be exploring some of these matchups to highlight what makes each unique, why their stats look so different, and what matters next for them. So here's our map for the day. We've got three clean face-offs: Alphabet and Baidu in search and ads, then Amazon and Alibaba in e-commerce and also the cloud, finally Meta and Tencent in social plus gaming and payments. We're not trying to be exhaustive here. We're just highlighting some of the unique challenges these companies face in their markets. So let's see how these stocks have performed so far in 2025. And here we have 6 companies with the US to the left and China to the right. From the left, Alphabet and Amazon returns have not been spectacular, both below 10%, but Meta stands out with a 34% return. But both Alibaba and Tencent in China win the performance race with returns over 40%. Now here's a reality check: scale. When we look at market capitalization, or how much the stock of the entire company is valued, the US names, they live in the multi-trillion-dollar zip code. Those are the 3 bars on the left. And towards the right, we see that China's giants are measured only in billions or hundreds of billions. That gap matters for everything from cash flow cushion, hiring, research and development, buybacks, and just general heft. Now let's go through these matchups one at a time, starting with Alphabet and Baidu. Alphabet's ad machine still leads globally, and that means more eyeballs, more data, and more pricing power. Baidu is deeply entrenched in Chinese search, and its cloud business is pivoting hard into AI. Alphabet just lost a key antitrust ruling in court that's affecting its Google search business and Chrome browser, and it could be a wild card going forward. Meanwhile, Chinese tech always faces a possibility of intervention by the authorities, and the tone has been a bit more positive lately, but that could always change. Next up, we have e-commerce and cloud with Amazon and Alibaba. Amazon Web Services, its cloud service, remains the profit engine driving cash. Alibaba is leaning into AI inside its cloud to re-accelerate growth. The wild card here is China's consumer. When confidence slows down, Alibaba's shopping apps, they feel it, and investors start gaming the next round of Chinese stimulus. In the US, Amazon has been it hasn't been in the antitrust crosshairs as much as some of other big tech, but it is an ongoing issue. Next up, we have social gaming and payments with Meta and Tencent. In the US, Meta has a gigantic ad scale and massive video viewing on both Facebook and Instagram. They keep climbing. And it's starting to monetize messaging. That is a brand new lever. Over in China, Tencent has this super app moat. Its WeChat ad is an all-in-one stop shop for its users, and its gaming business is starting to turn around. This is a tale of 2 ecosystems: global ads and messaging versus a Chinese super app with payments and games baked in. Next, let's take a look at some of the biggest shocks this year. First up, no surprise, it is tariffs. The US-China back and forth made uncertainty spike sky high. And since then, the tariff truth, it kind of cooled things down a bit, but the agreements could change. Second on that list, we have DeepSeek. That is the company that proved to the world, at least in theory, that AI could cost less and be developed without top-tier chips. That's huge as companies reconsider hundreds of billions of dollars in AI investment. Then there's Google's antitrust court case. That doesn't just touch Alphabet, it ripples through ad auctions, browser wars, device partners, and any app that lives off search discovery. Finally, here's the roadmap. For Alphabet and Baidu, watch those court rulings in the US and any China stimulus hints. For Amazon and Alibaba, you got to watch the cloud profit path. Does AI revenue outrun the build to build out AI? And for Meta and Tencent, watch how Meta turns messaging into money versus Tencent's gaming rebound. How does it have legs? Does it have legs? Bottom line, China tech is outperforming its US peers year to date, but the US mega caps, they still hold on to the global heft, and we're going to be watching the policy signals, the cloud mix, and who actually turns AI into cash. And tune into the Stocks in Translation podcast for more jargon-busting deep dives. New episodes can be found Tuesdays and Thursdays on Yahoo Finance's website or wherever you find your podcasts.